This week, there's a convergence of large macro events. How do you see these impacting volatility in the markets?
Well, the simple answer would be that the markets will do what they've been doing more or less for the past few months, and that is ignore them. But let's examine them each independently and see how that could move things. One of course, the big ones is the Comey testimony. It's hard to say what that could do to the market. Some of the early reports seem to be that they're talking about what fairly benign testimony from him, that he won't reveal anything too major and that he's going to be fairly cautious with his wording. If that's the case, then that really is not necessarily a market-moving catalyst. Moving over to Britain, the polls have shown a lot more variability in recent days, and so there is a bit more concern that that could move the markets. That would probably be more obvious in the currency markets than it would be in the U.S. equity markets. Of course, it would have ramifications to the British equity market. But a lot of that there is political subtleties in terms of how Parliament will be structured afterwards and whether May is viewed as having a mandate or not. But that's a very broad issue, and again, it's so many different variables that the market will probably choose to ignore all of them.